Hi everyone, welcome back to a fun-filled Friday where the markets were up, Bitcoin was down, and we had Silvergate to thank for that. So we're going to look at what's going on in the markets with Dow, S&P, and NASDAQ. We're up today. Bitcoin and Ethereum are obviously down today because of Silvergate. So we'll get into all that. Miners, on the most part, were kind of mixed today. And then we also have, like I said, Silvergate worries drive BTC and Ether lower. We also have DMG Q1 financials we're going to go over, Hive production update as well. And then we got Riot, which has both production update and their fiscal year 2022 financials. That also includes their fourth quarter that we will get into all of that. So it's going to be a long one. Chapters are going to be on the bottom for you guys to skip over to sections that you want to see. And as always, you guys know the drill here. I'm invested in the following coins and companies, and this is not financial advice, for entertainment only. Do your own research. And if you enjoyed this type of content, hit the like button, subscribe. Helps me out tremendously. Okay, so let's take a look at what's going on with the markets here really quick. We got S&P was up today 1.62% to 4,045. Dow Jones was up 1.17% to 33,390. NASDAQ was up 2.04% to 12,290. And Bitcoin today was down quite a bit. It was down 4.73% on the day. And it closed at 22,358. We were lower, much lower than that. We had a low of 21,988. And right now we're kind of battling with, well, kind of hanging on to actually the 50-day moving average here. You can see this light blue line. We're kind of bouncing in between it and grabbing onto it. We basically fell from the 20-day moving average down past the 50-day moving average and grabbed onto that for dear life, and we're holding on to it right now. If Bitcoin doesn't hold right here, which I don't know if it's going to be able to hold, you can see here on the RSI that the RSI went way down. But if we go back to where price rebounded here, you can see RSI was at 26. It is now at 40, while the price is basically at the same spot. So price is flat, RSI is going up. Leads me to believe that Bitcoin will fall some more if this continues going forward and RSI is increasing, and then eventually get another drop down. If that happens, where are we going to go? Potentially, I would think we're probably going to stop somewhere around here at our support line at 21,300, somewhere in there. We may test also the 200 daily moving average, which is this blue line right here, which you guys can see. So we may stop there for a little bit before we go down even further, but we'll see where it goes. We're in the weekend right now, so it's going to be a little bit maybe volatile than during the week. But this is obviously caused by the Silvergate issues, and we'll get into that here shortly. Ethereum, same thing. Ethereum was down today quite a bit. If we look at it right here, it was down 4.75% today to close at 1,569. We had a low of 1,547. And that one is basically also hanging out for dear life here at the 50 moving average, 50 daily moving average right now. You can see this light blue line here as well. So it bounced back up to that, and it's been grabbing onto it, fell below, bounced off of the 200 weekly moving average and went back up. But again, if we look at the RSI where it was with the blue line here, you can see that the RSI was at 30. We are basically at that same spot right now, and the RSI is coming to 44. Leading me to believe again that we are going to be possibly going down potentially over this weekend, but we'll see how that plays out. So miners, for the most part today, we're also a little bit mixed here. We have Any was down 1% today. And let's go back to the daily chart, close, get rid of the daily lines. There we go. So it was down 1% to 37 cents. Argo was down 3.55% to $1.63. Bit Digital was down 1.98% to $1.24. Bitfarms was down 4.98% to 88 cents. Cypher was up today 1.26% to $1.61. CleanSpark finished out the day in the plus column, up 0.39% to $2.55. I did dollar cost average in some more into CleanSpark today, bought it at $2.50. And we'll see if it continues going down. If it does, I'll continue to possibly buy in some more because it is below my dollar cost average price. So anytime I get a sale, I pick up some more. Okay, Cores was down 3.29% to 36 cents. DigiHost was down 2.27% to $1.29. DMG was down 5.31% to 21 cents. Greenidge was up 1.98% to 50 cents. Hive was down 2.14% to $2.75. Hut 8 was down 4.29 to $1.56. Iris Energy was up 4.6% to $2.62. Marathon was up 1.92% to $6.38. Mawson was up nicely today, 7.02% to $2.44. Riot was up 2.59% to $6.34. Soluna was up, Soluna was up really good here, 15.2% to 33 cents. It looks like investors liked the information that they provided yesterday about getting rid of the Maria project and concentrating on the other two projects that they do have. And then TerraWolf was down today 1.24% to 65 cents as well. So kind of mixed day in the miners. It wasn't actually as bad as I thought it was going to be, especially with Bitcoin being down almost 5% at one point. But it looks like I said, it looks like they are kind of trending more in line with NASDAQ than with Bitcoin recently. So that could be the reason why some of are still up while some were down. Okay, now as far as the network hash rate is concerned, on the 7-day average, we are back down to a little bit of 302 million right now. We were at 305, so a little bit of a decrease here. And on the one-day average, we spiked back up here to 359 million. That's down a little bit from the 363 million that we peaked at, all-time high there. So we are still claiming up higher. Next, let's get into the stories here, see what's going on with Silvergate. So Bitcoin, Ether slide on Friday as investors weigh potential fallout from Silvergate woes. Here's what we got going on. Cryptocurrency prices fell on Friday as investors weighed the latest financial woes at Silvergate Capital and assessed what potential bankruptcy at the crypto bank could mean for the broader crypto industry. So we've heard about them before. With FTX and some other companies, they were in a little bit of trouble here, and it looks like it's coming into light more of that. So the drop came in Bitcoin. The drop came late Thursday night, hours after several crypto companies said they've stopped accepting or initiating payments to or from Silvergate, including Coinbase, Galaxy Digital, Circle, Paxos, and Bitstamp. Silvergate, which has become the go-to bank for cryptocurrency businesses, gave notice Wednesday that it won't meet an extended deadline to file its annual report, and warned it may not be able to operate another 12 months. That is a little bit concerning there. That's why Bitcoin and everything else dropped because of that. So the bearish turn could certainly be a delayed reaction to Silvergate's ongoing issues. We've had FTX, we've had others as well. That brought Bitcoin way down last year, and it has rebounded since then, but now we got this issue to contend with as well. So many large exchanges and market makers partnered with Silvergate for fast transactions between entities, and any halt in activity could have an impact on global crypto liquidity. So the concern is the liquidity there, but we'll see how this plays out. It looks like we may have bottomed here a little bit on Bitcoin, but we'll see if that is the case or if we continue going down. Down here, we can also see that Noel Ashenson stated the following: the fact that it was a short and sharp dump and that Bitcoin and Ether prices are now bouncing along steadily suggests that the move was largely structural and the market still has considerable resilience. I hope that is the case, as I've shown you guys on the RSI. RSI has been going up, price has been flat. I don't like that setup there. I'm afraid we're going to possibly come down a little bit here in the weekend, but we'll see. And then Silvergate news is really bad, but should not directly affect Bitcoin holdings. Ashenson added, it could spook some macro investors, however, who could withdraw and wait for this to blow over, which I think might be also the case here. And if Bitcoin fails to hold the 22,000 level, the next stop will likely be around 21,400. The February low and November high converge, according to Hasawaga. So that's kind of what I'm saying is the 21,300 line is somewhere around there is kind of what we're looking at, and we'll see how it's going to play out. So at least we know why Bitcoin dropped. Let's get into some of the reports here that we do have from the miners. And the first one is Hive Blockchain. So Hive Blockchain provides February 2023 production update. So they mined 250 Bitcoin. They hodled 2,340 Bitcoin as is. And the company notes it reached over 3 exahash of Bitcoin mining capacity, but that's not where they ended up at. But that is good. So Hive produced 250 Bitcoin in the month of February. Hive reached its 3 exahash target in late February by mining at full capacity of 3,080 petahash. And they ended the month with 2.81 exahash of mining capacity. Hive has installed over 4,200 Buzz miners to date. Hive has received over 5,600 Buzz miners in its data centers and continues to install them to increase overall hash rate. Hive expects to receive an additional 645 Buzz miners in the next 2 months, representing a total production quantity of 6,300 miners. So that's good there. Let's see what we have here. Our average cost of power globally was 3.4 cents per kilowatt hour. So that's good there, nice and low. And then this is from Aiden Kylik. We have increased our overall hash rate by 16% month over month from January 2023 to February 2023. We are continuously looking to optimize our allocation of energy as a resource. This month, we did not sell energy back to the grid, but rather increased our operating hash rate, as this was the most profitable operating model. So that's good there. And even more impressive is our GPU HPC pilot project, which has been generating approximately 1,800 per megawatt hour of revenue. So that's really, really good here, because you can see here that Bitcoin, the S19J Pros, are getting $93 at Bitcoin being at 23,000, and their GPUs fleet that are mining other coins and then converting it to Bitcoin equivalents are getting $100 here. High performance computing is really profitable if they can get it to work all the time and 24/7. That would be a nice revenue there for them. And let's see here, I think that was it. Okay, so yeah, that's it for that. Nice update here. Let's take a look at the numbers that I do have for them, and then we'll get into the other ones here. So Hive currently has 83.2 million shares outstanding. The stock price is old. I forgot to update this. This was from yesterday, so I think that's down a little bit here, but not much from it. Market cap is about 233 million. The current hash rate is at 2.58 exahash. Future hash rate is about 3.5 exahash. They are 73% operational, 74. And then hash rate growth left is about 35%. Bitcoin HODL is 2,340 Bitcoins. That's valued about 55 million. And that's HODL to market cap is 23.57%. And each share has 66 cents in them. Now, as far as BTC production is concerned, they have been coming down here ever since September when Ethereum went to proof of stake. And they had 396 in September. October was 307. November was 264. December was 213. Had a nice little jump here in January of 260. And then we're down in February to 250. February was a shorter month by 2 days, 3 days, depending which one you're going by. So they're in line with where they were in January as far as production per day on Bitcoin. So that's good there. Efficiency-wise, BTC per exahash has been coming down here as the network hash rate has been increasing. We're going to see that across the board coming from pretty much all the miners here. But they were above 100 here for the past couple of months. And then they got below 100 here at 96.69 based on my calculations for them. Now, their 250 Bitcoins mined equates to about 5.8 million in revenue. They did say they sold some. Looks like they sold about 340 here at about 7.9 million. I think they said they sold less. Let me see here. Where do they say it here? Do I have it in here? It was in here someplace. Where was it? They talked about it. BTC HODL, here it is. So today, 2,365. As of today, 2,365. They sold 267. Sorry, for 6.6. So 2,365, 2,365, 2,365. That didn't get updated. So I still have them selling at 315, potentially here based on that they're reporting it on as of today. So we're 3 days in. They could have had a little bit more Bitcoin from that, but still sold 267, and I have them at 315. So a little bit off by that, but they're also not reporting the end of month Bitcoin price or Bitcoin HODL, which would have helped get my numbers more correct from that. So that's the HODL position here as far as miners being installed here in February. Like I said, they were operational for the full month, so 28 days out of the month, so that's good there. We did install, which ones did we install here? We installed, looks like these potentially here, miners to get them to the 2.5 exahash here. And those, yep. So we installed these miners here, and they were all mining for the full month, it looks like. And then for their GPU mining, equated to about 516,000, because that's the only way I can make it work with the numbers they provided and get to the 5.8 million here that they do have. Okay, so that's the way it's looking right now. So institutions did decrease here a little bit here from the prior month to 95 from 97. Shares did increase though, which was good, 13.6 million from 12.3 million, and percentage increase as well from 14.74 to 16.25. So that's always good. You got institutions buying. That's a good sign. As far as analyst ratings, we still have 1 strong buy, 2 regular buys, and then 0 hold, 0 underperform, 0 sell. Price target is still 7 for the high. It went down a little bit here on the average to $4.98 and went down a little bit on the low to $2.95 from $2.99. Okay, so based on all the information that we do have, let's take a look at where they actually stand up right now based on the current quarter that we're in, which is going to be about 16 million. If Bitcoin stays where it's at right now, hash rate stays where it's at, and they mine the same amount. It's kind of what we're looking at here for March, January, and February numbers. And then if we're looking at the last 3 quarters, those are actual numbers for them reported. We have them at about 104 million in revenue. If we use the 50% net income from gross revenue with a PE of 15, we're looking at $9.46 for them. And then 75% net income from gross revenue with a PE of 15, we're looking at $14.18. They are currently at $2.81. They are way undervalued in my opinion from where they should be. And we'll see where they end up at. So the good thing is with them is they are still continuing to grow. They are operating really well as well, with being up basically 100% this past month, so that's always good to see. And we just want to see them continuing to grow. There are some miners that they possibly could get rid of, which are the older ones, which I wouldn't be surprised if they do get rid of them. Let's take a look at those over here. These are the 74 terahash miners. I would get rid of those. Potentially, I think they got rid of some of them here as well here, but we still have some that are operating. I would get rid of those, the rest of those, and then call it a day on those and make room for newer miners. But they still have quite a bit of miners left to get installed here, so they still have quite a bit of growth in them as well. Otherwise, keep up the good work, I guess you could say, and just continue to grow. Okay, so that's it for Hive. Let's get into the next one. So the next one is going to be on DMG. DMG provided their first quarter financial results ending December 31st, 2022. Here are some highlights from that. Revenue of 7.2 million on 274.7 Bitcoin mined. Net loss was 7 million or 0.04 net loss per share. DMG leads the industry, having executed its Petra technology and is using the technology to be the first to place carbon neutral ordinal transactions on the Bitcoin blockchain. Ordinals are those kind of like NFT things that are popping up on the blockchain there. We talked about it in a previous video. DMG is cautiously investing in key infrastructure and software initiatives, focusing on optimization or optimizing its investments in the challenging crypto environment. Strong balance sheet as of December 31st, 2022, with 10.9 million in cash and a digital currency of 453.06 Bitcoin and debt of 1 million. So that is looking pretty good there. Okay, so let's take a look at the numbers that we do have for them for the Q1, and those are over here. So we do have Q1 2023 numbers, and let's just take a look at it here. So I pulled all this information from the report, put it into my spreadsheets. That way I can kind of see, track them, how they're doing quarter over quarter. Makes it a lot easier than going through different PDF files, you could say. Okay, so cash and cash equivalents was down to 683,000 from 1.2 million, and these are in Canadian. And then I do also convert some of the numbers here to USD dollars just for reference. And those can change because those are going based on the exchange rate. Whenever I open this spreadsheet up, that does change. So we're always going by the Canadian numbers. Okay, accounts receivable was 6.9 million. So that's up from 6.3. So that's good there. Digital assets also increased to 10.2 million from 9.3. So that's good there. Prepaid expenses pretty much stayed the same, up a little bit here. Current portion of lease is 0. Amount receivable is 0. And marketable securities is down a little bit here to 172,000 from 401. Okay. Other assets here, long-term deposits is down to 8.8 from 14. We also have, let's see here, property and equipment is about this, well, down a little bit, 58.013 from 58.083. So that's not too bad. We got a bunch of zeros here. Long-term investments is 45,000. That's less than it was here at 75,000. Amount receivable is up a little bit here to 6.7 from 6.6. So in the end, they came up at 92 million for total assets compared to 96.9. So that is a little bit of a decrease there, but their current assets did increase to 18.4 from 17.5. So that's good there. Now, liabilities here. Trade and other payables went up to 5.5 million from 4.8, so that's not good. Deferred revenue was 168,000 compared to 103, so that went up a little bit here as well. Current portion of lease liabilities is 92, so that's down actually from 131, so that's good. And the current portion of loans payable is the same amount there. So total current liabilities increased a little bit to 6 million from 5.3 million. And long-term lease liability is down a little bit to 74,000 from 92,000. And then secure loan payable, don't know what that is, 956,000. So that did increase there on that one. So total liabilities increased to 7 million from 5.4. That's not good. It did increase a little bit, but not too bad. They were going down here, but they somehow increased here a little bit in the first quarter. Okay, shareholder equity, let's see here. Share capital was 110 million, reserves was 44 million, and accumulated other comprehensive income was 111. So those are up, well, share capital is up a little bit, reserves is down a little bit, or up a little bit as well. And accumulated other is down a little bit, accumulated deficit is up a little bit. So total stockholder equity is 84 million compared to 91, so that's down a little bit. And then total liabilities and stockholder equity is down a little bit to 92 million from 96 million. So that's not too bad there either. Revenues, this is the part that we're really interested in. Revenues was 7.1 million. This is for, let me see, this is for their total revenues here. So self-mining was 6.6 million. That is an increase from the Q4 of 5.4. So that's good there. Hosting was down actually a little bit to 464,000 from 592. Mining pool fees was 0. So that's down, along with forensics and consulting income. That was down. Software license income was 34,000 from 434,000. Wow, that's a big decrease there on that one. Other was 4.6 thousand compared to 14, so that's also down quite a bit there. So let's see here, selling mining in USD. Oh, this is basically what in USD dollars, what they mined for themselves was 4.9 million compared to 4.0 million here. And total revenue was 7.1 million. That's up from the 6.5. So even with these decreases here, they still increased revenue. So that's good there. And a lot of it was based on their self-mining, which was up almost 1.1 million here. So that's good there. Operating and maintenance costs, let's see here. And there was 4.4 million. So that's a pretty big increase here from the 3.4 million that they were. That's almost $1 million more. General and administrative was way up here to 947,000 from 94,000 for some reason, which is pretty low. In Q4. Then we had stock-based compensation down a little bit here to 515 from 550. And research and development was down, which is good, 431,000 from 1.2 million. So that's good there. Provisions of doubtful 63, so that's pretty close to where it was. Provisions, let's see what else we have here. Depreciation, we got 0, so that's down. Amortization was 12 million, so that's up a little bit from the 11 million. So total expenses was 9.1 million compared to 8.2 million, so that is up almost 900,000. So that's not good there. Gross profit was negative 5 million compared to negative 4 million. Gross profit minus depreciation was 2,200,000 compared to 2 million, and gross profit minus depreciation percentage was 33.91% compared to 36, so that is down a little bit there. Other income expenses, not really going to get into it. I don't think there's anything here that's kind of eye-dropping. The only thing that's unrealized, we have revaluation loss on digital currency. That one is down to 1.4 from 3.4, so I think that's good there. Realized gain, loss, had a loss here, 177, where they had a gain there, but that's just depending on where Bitcoin goes, not a big deal there. So net income loss was 7 million compared to 9 million, so that's good there. And let's see here, then we got total comprehensive income was negative 7 million compared to negative 9, so that's good there. And then we have the actual net income per share, negative 4 cents here compared to negative 6 cents. So that is a little bit better there. So that's good there. Now, when we look at some of the metrics that we do have here, BTC mined for the quarter was 274. Starting hash rate was 767. They ended up 917 petahash. Average was 842. So that was a nice little increase here, 150 petahash during the quarter. Hash rate increase, decrease. BTC mined per average hash rate. So that was 325 Bitcoin. That did increase here from Q4. So that's good there. Not too far away from the Q3 numbers. So that's pretty good. And then cost to mine, 1 Bitcoin minus depreciation came out to be 16,000 Canadian dollars. And then debt to equity is 0.834. So that did increase here from 0.059. So a slight increase, not too bad, but still we don't like seeing increases. And then current ratio also went down a little bit, 3.0 from 3.2. And that's still not too bad, but we don't want to see that going down. But I'd rather have them come down a little bit here, but still stay above 1. That way we know at least their cash flow is being utilized and we're in good shape there. Revenue was 7.1 total for everything. General administrative compensation was 1.4. So that went way up here to 20%. Basically what their general administrative is of their revenue, 20%. That's pretty big here for them. The highest they've been here that I've been recording them was 17. They went down to 14, then 9 in Q4, but in Q1, they're way back up to 20. So that's kind of concerning as well. We like to see that number a lot lower. So overall, with Bitcoin being where it's at and everything else going on, they're doing pretty much the right things, I think. They are growing, even though they are growing slowly, but they are growing. And there's not much you can do about it. I mean, it's all based on Bitcoin price, where it goes with network hash rate, everything else. So I think it's okay. Given that where we were for the quarter, Bitcoin coming down and everything, they were able to grow a little bit here. So that is good there. And then we'll have to see what Q2 for them, which is now the quarter that we're in currently, will be like for them. Okay. Otherwise, I don't think there's anything else to really go over. Numbers weren't great, but they weren't bad either. So we're kind of on the average side of things. Right now, they are trading at what, like 20 some cents. I have them at $1.02 here. I don't know if you guys can see this, but this is kind of my estimates where I think they should be is about $1.02 between that and $1.53. If they were getting PE of 15, they're definitely not getting a PE of 15 right now. They're getting a PE of 1 or 2 right now, based on the information that we do have for them. So that is it for DMG. Let's take a look at next one, which is going to be Riot here. Riot, we have 2 things to cover with them. We have the February production update and their full fiscal year 2022 numbers, which also includes their Q4 numbers. So we'll get into all that here next. Okay, so Riot's February production update. Let's take a look at the information that we do have. So Riot produced 675 Bitcoin, which is an increase of approximately 55% as compared to February 2022 production of 436. So that is a good growth, even though network hash rate has been growing as well. Riot held approximately 7,058 Bitcoin as of February 28th, 2023, all produced by the company's self-mining operations. Riot has sold 600 BTC, generating net proceeds of approximately 14.2 million. And then Riot had a deployed fleet of 87,264 miners with a hash rate capacity of 9.8 exahash per second. That is a slight increase from January. As of February 28th, which excludes, however, 17,040 miners that are offline as a result of damage to Building G from the severe winter weather in late December in Texas. I'm surprised they still haven't gotten that fixed and up and running, but it is what it is. Maybe they're waiting on some parts for it, which could be the case. And here we go. Riot said, we have also continued to make progress on repairs to our immersion building, including Building G, where we now anticipate a return to full operations by the second half of 2022. So that's still at least a couple months out. So that's unfortunate. It would have been nice if those miners were running. And then once achieved, this will bring back 1.9 exahash of future hash rate currently offline and not included in our report hash rate capacity. So that is unfortunate there. And then mining deployment and shipment updates. So during the month of February, Riot deployed 4,608 S19 series miners and ended the month with approximately 2,304 miners staged for deployment. Upon deployment of the staged miners, the company expects to have a total of 89,568 miners deployed with a hash rate capacity of approximately 10.1 exahash, which excludes the 17,040, which we talked about. Okay, and I think that's it that I found interesting in here. Take a look at the numbers that I do have for them, and then we'll get into the fiscal information as well, financial information. Let's see, Riot is right there. Okay, so Riot has about 167 million shares outstanding. Their stock price is about $6.18. It's up a little bit now today. This was from yesterday. Their market cap is at $1 billion right now, so they are the largest one here out of the bunch here, I believe. And their current hash rate should be 9.7. It should be 9.8. This is still, why did it not convert over? Did I forget this? Let me see here. What did I have it at? 9.8, 9.8. That should work. What do we have here? 9.8. Oh, should be down here. Okay. So now that we have that right, 9.8. Future hash rate is about 12.5. They are 78% operational right now. Future hash rate growth is about 28%. Current HODL is 7,058, which is 166 million. Their current HODL market cap is 16%, and each share has about 99 cents of HODL position in it right now. Their Bitcoin production has been going up here the last several months, which was great to see because it was going down during the summer months, and that's because they were doing a lot of curtailment. Now, in February, they mined 675 Bitcoin. That is down a little bit from the 740. Given that they are mining about 20-some Bitcoin per day, with the 2 days less than we had in February, you would get another 50 or so. They would be pretty close to January numbers, which January had 31 days, I believe. So if you do that, add another 75 to that, they would actually beat January numbers of around 750. So I think they're doing great there. Their Bitcoin to exahash efficiency is, it's on average. It's right now at 68. They have done a little bit of curtailment here. It looks like in the month, I believe. That's the reason for that. Plus they installed about 100 petahash as well, which always lowers the efficiency as well. Okay. So right now we have them at generating approximately 15.7 million in revenue. That is an increase here over January at 14.9. So that's still good, even though we had less days, but Bitcoin price has gone up. So that's also the reason for that. And they did sell, what did it say? 500 some odd Bitcoin. So that's about 13, 14 million or so for them. In February, we installed here these miners, the 90 terahash miners, looks like approximately those. And let's see what else did we install here. I think that's it. Yeah, just 100 of, well, 1,112 of those to get us the 100 petahash that we needed. And then everything else was running at 26 days. So they did curtail for about 2 days here, where they curtailed quite a bit more here in January of 22 days that they were mining only. Okay, so that's the numbers we have for them there. They did increase, let's see here, the revenue on the Bitcoin miners per day decreased by about 10.36% here from January. And that's mostly due because of the network hash rate increase, but they did increase revenue by 5.34%, which was great. Now, institution-wise, institutions did increase here to 331%, or 331 institutions, sorry, and shares did increase to 62.8 million from 59.8, and percentage owned increased as well to 37.58 from 35.75, which is good as also. Now, analyst ratings, that did increase here for the buy. So we know we have 2 strong buys, 9 regular buys, 0 hold where we had a 1 hold before, 0 underperform, 0 sell. Price tagger did come down a little bit to $12, and the average went down to $9.44 from $9.53, but the low stayed the same at $5 right now. Okay, so that's everything that we have for them there. Based on all that information, we're using the current quarter of approximately 49 million, which is going to be a pretty good increase from the prior quarter of 30 million. And then we're using the last 3 quarters, which the prior quarter is an estimate. And then we're using the 2 prior quarters, which are already announced. Okay, I think I can maybe update this for, if this is for the 4th quarter here ending, we may have the numbers down below. We'll take a look if those are close. Okay, so let's get into the numbers that we do have for them. So these are the fiscal year 2022 numbers down here. Assets, so this is Q4. Okay, let's take a look at what they actually had as far as revenues. Revenues was 30.704 million, and we had them at, what do we have them at? 30.3. So we're off by a little bit. So 30 million. 740,123, and let's see what how far are we off on that one. We are off by 1.2%, so not too bad. That's still within my margin that I want to be in. I want to be within 2.5% at the very most, so not too bad there. We can possibly use that number as well. Let's do this instead and change that to 30,74123. There we go. Now we actually have that 30 million. One more 0. There we go. Okay, so let's take a look at the numbers that we do have for them for the fiscal year 2022 and Q4. So current assets was at the end of Q4, basically for the fiscal year, was 230 million, and that is based, so that's lower from where it was in Q3 of 254 million. Accounts receivable was up nicely to 26 million from 17 million. Cost estimates Estimated earnings in excess of billings was 19 million from 15, so that's a nice increase there. Prepaid expenses and other current assets was up as well to 32 million from 22 million. Digital assets was down actually to 109 million compared to 125. Future power credits also was down a little bit here to 24 from 39 million. And investment was 0, so that was down a little bit there. So total current assets was 443 million compared to 476 in Q3. So a little bit of a decrease there, about, 30 million roughly, that they are down 33 million. Other assets, property and equipment went up to 692 million from 650, so that's good. Deposits went way down to 42 million from 178 million, so they are getting equipment in, so that's why the deposits are coming down. Intangible assets was up to 21 million from 13. Derivative assets was 97, so that's down from 112. Right of use was 21 million, about the same as it was, a little bit lower than it was in Q3. Future power credit less current portion was 638,000. Other long-term assets was 310,000, so that's about the same. The total assets was 1.3 billion compared to 1.4, so that's down about 35 billion, something like that, 35 million. So that's down a little bit, so that's not good there. Let's see, what else do we have here? So liabilities. Accounts payable went up here to 18.4 from 12.6, so that's up a little bit. Billing in excess is down actually 8.4 from 11, so that's good there. Accrued compensation, 65 million from 5 million. Wow, that's a lot. That's something went up there quite a bit here. Accrued expenses, we don't have anything like that. Deferred revenue was up a little bit here, 2.8 from 2.5. Contingent considerations was down to 24 million from 39, so that's good there. And operating lease is up a little bit to 2 million from 1.6, almost 1.7. Total current liabilities is up to 121 from 107, so that's not good. We want to see that come down. And then total liabilities here, we're not going to get into all this, is 168 million from 154 million, so that's up about 14 million or so. So that's not good too. We want to see that come down. And then when we look at total shareholder equity, that is 1.1 billion compared to almost 1.3 billion here, so that's down. And total liabilities and stockholder equity is also down to 1.3 billion from 1.45 billion, so that's almost down 130 some million as well. Revenues. This is the important part. Revenues is mining. For mining, they had 30 million compared to 22 million, so that's good. Hosting was up a little bit as well to 8.9 from 8.3. Engineering was up nicely to 20 million from 15 million, and other revenue was 24,000 compared to 25, so it's about the same. Total revenue was 60 million compared to 46 million, so that's good there. We had a nice increase in revenue in the fourth quarter. Now expenses, mining went up quite a bit here, 22.5 million from 14 million, so that's a pretty big increase there. Hosting also went up to 17.5 million from 14, and let's take a look at this. Hosting, I'm guessing that the power credits and things like that can help offset this, but right now if you look at 17 million for the expense here compared to 8 million of generated for hosting, this is why I don't like hosting at all. I would get out of that as fast as possible. Engineering was 16.9 from 13, so a little bit of an increase there, but they also increased the revenues here, the income. So that's fine. Selling and general administrative was at 29 million, so that's up quite a bit here from 16. That's not good there. We don't want to see that get too high. Depreciation, amortization was up also 46 million from 26 million. Change in fair value of derivatives stayed almost the same. Power curtailment credits, that was down to 8.5 from 13 million. What else do we have here? Realized gain on sale, that was at negative 4.9 million from 1.8 negative. Casualty related charges, recoveries.net. Not sure what this is, 9.6 million here. And then impairment of cryptocurrencies was 15.2 million compared to 5.9. Goodwill was 13 million. Impairment of miners was 55 million. I'm not sure what that is. I'm guessing that's maybe for the miners that were hit with the storm, if that's what they're talking about there. And total costs and expenses was 204 million compared to 86 million here in Q3. And they had a lot of expenses here as well in Q2, 438. So definitely way above where it should be, I believe. And we're taking that number, yeah, that's all the information there. And that information being calculated by the numbers provided by the fiscal year 2022, subtracting everything else from it. And that's how we're getting those numbers. Okay, so gross profit operating income was negative 144 million for the quarter, negative. And then for the full year was negative 512 million. Gross profit percentage, well, that's a negative there. Gross profit minus depreciation was 8.1 million compared to 7.3 million in Q3. So that's good. That's an increase there. And then gross minus depreciation percentage was 26%, but that's down here from Q3, so that's not good as well. Okay, other operating expenses here totaled about negative 603,000 compared to an increase of 490,000, so that's not good. Then income loss before income taxes was 145 million here in Q4 compared to 39 million in Q3. Total for the year was negative 521 million. And let's see here, total net loss was 509 for the year, negative 142 for the quarter, Q4, and 36 million only for Q3. Well, that's not good there either. And then if we look at the shares, net income per share was negative 90 cents here in Q4 compared to negative 24 cents, but we did have negative $2.81 in Q2, so not as bad as that. But overall, for the full year, we were down $3.65, and that's based on 139 million shares, roughly weighted average of number of shares. Okay, they got to get better with their finances here. Unfortunately, they are burning through cash, and a lot of the stuff is based on the revaluation of digital currencies, the amortization of the miners and everything else, which I get. So here's what we do have for them for the Q4 numbers. So BTC mined was 1,689. Starting hash rate was about 5.6 exahash. They ended up with 9.7 exahash. Average hash rate at that point was 7.6 for the 3 months. That was an increase of 4.1 exahash, which was really good growth in that quarter, Q4. And then they mined on average about 220 Bitcoins per exahash. They have done a lot of curtailment because, well, it was more profitable to do that. And then cost to mine 1 Bitcoin minus depreciation is 13,000. So that actually went down from the 14,000 they had in Q3. So that's a good sign there. And let me see here. Market value is, okay. So now that's enterprise value is 1 billion basically, about the same where it was in Q3. Debt to equity went up here a little bit to 0.1 from 0.08. And the current ratio went down to 3.6 from 4.4. Then book value of equity, assets minus liabilities, BVE, is 1.151 billion. So that's down from the 1.299 billion. And then price to book ratio, which is market cap BVE, is 0.898. And then revenues was 16 million compared to 46 million. General administrative was 29 million. And 16 million for Q3. So that's basically 49%, almost 50% of their general administrative compensation was spent on that. So that's got to come way down here. Not sure why it's been going up like crazy here, especially since Q3 and then into Q4 as well. Definitely want to see that come down. I don't know if that was stock-based compensation or what, but that's obviously concerning as well. Okay, so that's it. So it's been a lot of information. The growth has been great for them the last couple months here, last quarter. Especially, and now that they're into the new year, they've been going pretty well, not as well as they have been. Plus, they've had that site be impacted by the winter storm that, well, knocked them out, basically 1.9 exahash. So they got to get that fixed. They got to get compensation under control, other expenses under control as well. And I think we should be golden as long as Bitcoin continues to go up. Hopefully, by that time, they can get everything here that they do have going on with their expenses kind of under control, especially, like I said, especially the compensation. We'd like to see that get better. But overall, great growth by them. They just got to keep it up and improve on the things that we talked about. So let me know what you guys think of all this. There were a lot of numbers in here. Try to go through it as fast as possible just to, well, not waste your guys' time. So if you guys enjoyed it, hit the like button, subscribe, helps me out tremendously. Spreadsheet is always available to my Patreon members, so thank you to everyone there for their continued support. I hope you guys have a great Friday, great weekend. We'll see what happens over the weekend, and then we'll talk some more. All right, I'll see you guys in the next one.